Welcome to the Cambridge Financial Podcast with Bert Salazar, CEO at Cambridge Financial Partners, LLC. This podcast is all about tax-preferred retirement planning, economics, financial risk management, and achieving a risk-free and successful financial life. Now, your host, Bert Salazar. Bert Salazar. Bert Salazar.
Hey, good day, everyone. Welcome to another Cambridge podcast. As always, I'm very, very excited to be here with all of you today. And today's podcast is going to cover a couple of different issues that I think are very critical for all of us that happen to be on this podcast today. The first one is the running of the bulls, and we're going to talk a little bit about, the tremendous bull run in the stock market and the historical data that we have along those lines. And then the second issue that we're going to talk about is death by a thousand cuts. As you all know, Aretha Franklin, one of the premier R&B singers of her time, died this week, and she died without a will. So we're going to be talking a little bit about that. But obviously, it's very critical that we provide you with good, strong education, because at the end of the day, information without education always leads to failure. So this week has been an exciting week in the stock market, and this is why I call it the running of the bulls, because the current bull market is the longest in modern history. August 22nd was the cutoff date, or the date in which this bull market is now officially the longest in U.S. history. It has become the longest running bull market at 9.5 years. So we have had a 9.5 year bull market. And although it appears that it may have some steam left, the fact is that no bull market has ever made it to 10 straight years of a bull market. So it remains to be seen. It's very interesting what is happening in our country today, economically and politically as well. But this is kind of reminding me and reminding many of us of 2007 all over again. Because if you'd recall, prior to 2007, we could do no wrong. The market was doing extremely well. The real estate market was doing really well. The economy was flying fairly high. And then all of a sudden, 2008 hit. So I think, this brings me to a very simple but profound question. And the question is, what happens when a bull market ends? And how do we deal with it? Well, according to investment strategists, and one of them, Sam Stovall, which I have done a lot of reading on, Sam says that the longest running bull markets have historically go out with a bang, not a whimper. So whenever we have a correction on a bull market, most of the time it's going to happen very quickly, and it's going to be a major bang, not a whimper. Now, the only bull market since 1950 that lasted almost as long as the current one was if you'd recall, was the dot-com fueled rally of the 1990s. And then it flamed out very quickly. As a matter of fact, many investors had piled a tremendous amount of assets into technology stocks back then, obviously investing through the NASDAQ, and they saw losses nearly 80%. So if you remember back then and you were investing in the stock market, the technology sector was going through a tremendous boom at that point in time. And many clients and many Americans decided to put all their money in the one technology basket, and they suffered dearly. Many of them are yet to recover because they were in retirement at that point in time, and they needed to evade principal and interest in order to make ends meet. Now, when a bull market ends, it causes all kinds of pain for people. They may lose jobs, homes, their life savings, their retirement savings, and many a times their marriages, and that's even sadder than anything that you can imagine. It has taken the market historically up to 25 years to recover from a major market crash. So we need to be very cognizant of all the issues that are taking place today in order to make certain that we're fully prepared to avoid such a market crash. Well, we're not going to be able to avoid the market crash, but we can definitely avoid what it can do to us from a business and financial perspective. Now, it seems as though many people have forgotten the lessons learned in the last two market crashes that we have had in the past. And as a matter of fact, those two market crashes have actually wiped out 50% or more of the typical investor's hard-earned savings and retirement savings. And by the way, if you have forgotten, that happened twice just since the year 2000. So in the last 18 years, we have had two major market crashes in which many Americans lost 50% of or more of their savings and or retirement savings. Now, obviously, I've done some reading on behavioral finance and why do people act the way they do, either when the market is bull or when the market is a bear. Usually, if you want to simplify the terms on how to invest in the marketplace, well, you want to invest, you want to put money in the market when the market is going up, and then you want to be out of the market when the market is going down. Many a times, most of us, because of greed and or fear, we do exactly the opposite. When the market is going down, instead of us buying more, we start to sell. And the minute that you sell a stock or bond or mutual fund, or you get out of an investment and the market is heading south, you have just capitalized on all your losses, and there's no way that you're going to be able to recover them at some point in time. Now, humans are hardwired in many different ways to kind of conform to what everyone else is doing. And there are many books that have been written. One in particular is called The Contrarian, which basically states that we should all be doing the opposite of what the masses are doing, because the masses economically are always wrong from a business perspective. Now, and the reason, and one of the major drawbacks of people just following the herd and being followers as opposed to leaders is that they get torn to pieces and they get slaughtered like sheep by Wall Street over and over and over again on a regular basis, and it has been happening for decades and many years along the way. We have a very short memory, and many times we just don't know how to read markets and how to maximize our internal rate of return without jeopardizing our principal. I think the other question that I would ask all of you on this call is, how many times in retirement can you go through a market crash? The other issue is, well, what if you could have your cake and eat it too? What if you can have a strategy that may allow you to participate in the upside potential of the market while protecting your assets, from market crashes in the future? Now, just to give you a little bit of a historical data on this topic, if we go back to December of 1999, the Dow was at 10,000 points, and it was the first time in history that the Dow had hit 10,000 points. Then in 2007, the Dow was at 14,700 points, and it was the first time it had also done that. But then by March of 2009, the Dow was down to 6,700 points. So remember, it started at 10,000 points in December, or it hit 10,000 points in December of 1999, and by March of 2009, it was down to 6,700 again. Not until December of 2009, or pretty much 10 years later to the date, was the Dow back to 10,000. So in many different ways, that decade we call the decade of nothing. Because if you were invested in the Dow, you started with 10,000, you ended up with 10,000, and you made nothing. As a matter of fact, the vast majority of Americans that invested during that market period lost money, because obviously, if you needed to take money out to make ends meet, obviously you needed to sell at a point in time where the market was heading south. On top of that, you continue to pay fees. If you were invested in mutual funds, you're going to pay fees when the market goes up. You're going to pay fees when the market remains level. And most important, you're going to pay fees when the market goes down as well. And then if you sell a position in which you have a gain, then you're going to have to pay taxes on top of that. And so those are things that are very, very critical. And obviously that's something very important for all of us to understand. The NASDAQ was even worse, because in March of 2000, the NASDAQ hit 5,000 points for the first time in history. In March of 2015, so that's a decade and a half, that's 15 years later, the market was still at 5,000 points, so it had gone up and down, but at the end of 15 years, it remained at 5,000 points. So pretty much a NASDAQ went on a 15-year vacation between 2000 and 2015. So as we get closer and closer to this bull market that we're dealing with right now, which is sitting at 9.5 years. And if you start to understand, you got to start thinking outside of the box. Take a look at what is happening economically and politically in the United States today. Now, economically, we're doing very well. Unemployment is down. There are more jobs available today than there are people to fill those jobs. Obviously, a lot of professional jobs along those lines. The national debt is very, very high. And now we have tariffs. We're dealing with some wars when it comes to different countries in tariffs. Now, tax rates are at the lowest they've been in many, many years, or, from a business standpoint, that gives us the ability to start thinking more along those lines of tax planning than ever before, understanding very well that we only have an 8-year window because this is not tax reform. This was done under a Budget and Reconciliation Act, and in 8 years from now, in 2025, unless Congress decides to, continue the tax cuts, things are going to go backwards. Now, what is happening politically? Well, now we're going to have a midterm election in November. The Democrats may take over the House. If they do that, obviously they have been promising they're going to start impeachment proceedings against, the President of the United States, Donald J. Trump. Now, whether they're going to be successful in doing that or not remains to be seen. But what's going to be the economic impact on that? Are the markets going to tumble? Because they're seeing this friction, and they're seeing that the presidency of the core of the government may be tumbled at some point in time in the future. What's going to happen with the trade wars? Are we going to have another war? What's going to happen with North Korea? Are they going to get in line? Are they going to, become more of an economic powerhouse and what they've been trying to do over the last 50 years? What is going to happen with Europe? So all of these things that neither one of us have any control over are definitely going to have a tremendous impact on your retirement assets and on your savings. So you have to be very careful about that. Now, we've done other podcasts on sequencing of returns and so forth, and we're not going to be talking about today, but you got to make certain that any financial decision that you do now and for the next 8 to 10 years, that you take into consideration principal protection. So we do have the ability at Cambridge to make certain that your hard-earned assets are guaranteed, that you can still benefit from the upside potential of the market, but that the worst that you can do in a market downturn is zero. Now, how many of us that invested back in 2000, 2001, 2008, 2009, where many Americans lost 30, 40, 50, 60% of their investments, and their 401ks became 201ks. What if at that point in time the worst that you could have done was zero? So if you had $500,000 in a 401k and the market dropped 50%, that your account value at the end of that year would still remain at $500,000. That would have been priceless at that point in time, but many of us think about doing those things, but few of us ever truly protect our assets from a business perspective. So again, those are things that are very critical to understand, and I felt it was important for me to cover the running of the bulls, because obviously we have never had such a long bull market in the history of this country. So I think it was important to be able to bring that to the forefront. The second area that I want to talk about today, and the final area that I want to talk to all of you about today, is death by 1,000 cuts. Now, Aretha Franklin died without a will. And it's interesting that all of these people that have done so well financially for so many years, and by the way, I've been a retirement strategist now for almost 30 years, so it comes as to no surprise to me that people that are advised, and they have CPAs and attorneys, and they have business managers and so forth, that none of them place that much attention on making certain that if you have a certain amount of wealth, that you get to protect that wealth, and that you get to put together wills and trust that will assist you in passing on those assets to the next generation in the most efficient and effective manner possible. Now, Aretha, as I have just stated, left no will when she pretty much died last week at the age of 76. That has been reported by the New York Times in the last 24 hours. Now, according to Michigan law, her estate will be divided amongst all her children, but a lack of estate planning documents could actually result in details of her personal finances being made public, which is not a good thing, and then family infighting. The Times notes that the estates of musicians are especially complicated due to music rights because of all the years that they have a tendency to perform, and they come out with new songs, and they buy certain rights, and they may even buy rights on other singers' music and so forth. So it becomes quite complicated, and there are attorneys that specialize in dealing with those issues, because many a times the rights of a musician or an actor, or especially a singer, can be worth a lot more in the future than they were worth in the past. Take a look at Elvis Presley. Elvis Presley, I believe, died in 1977. When he died in 1977, he was pretty much broke. I think his net worth in 1977, now obviously for us it was a big deal, but it was less, than $5 million. And this is someone that had made hundreds of millions of dollars in his career. Now today, his estate generates anywhere between $50 and $70 million a year, just because of all the rights to the music that his estate owns. Now, a 2017 survey by Caring.com found that, the majority of Americans do not have any estate planning documents. And one of the things that I'd like to share with all of you here is that please do not become a victim of poor planning. No one ever dies at the right time. And I have delivered, in my financial planning career, I have delivered multiple death benefit claims to beneficiaries and surviving spouses, and I can tell you that no one ever dies at the right time. Now, for a few well-spent dollars, you can actually protect your assets and your family from the probate nightmares. Obviously, I use a company, and then if you feel free to reach out to me. and I'll share with you a code where you're going to get a really nice discount, and you can protect yourself and your family and your heirs by doing a proper will and trust. And it's not going to cost a lot of money. It's pennies on the dollars, and you're going to be able to have a basic will. You're going to be able to have a basic trust. You're going to be able to have durable powers of attorneys that are so incredibly important at a point in time where you may not be able to make a decision for yourself, that you can give power to someone to be able to do that. Also you're going to have the ability to have a living will, which is extremely important because, a living will is going to dictate, or a healthcare proxy, that they'll together dictate, what to do at a point in time where you cannot make medical decisions for yourself. Do you sign a DNR, a do not resuscitate? One of the major issues that we see from legal terms in the marketplace, and we see this quite often, and not as often as they happen because we only hear when it gets to the news and so forth. But families that have had children or family members that are in comatose, and there's no DNR in place. So now some family members may want to pull the trigger and pull the plug. Other family members say no, so they have to litigate those issues. And at the end of the day, the only people that make any money when you go into litigation are the attorneys that are representing both sides of the equation. So having a proper will and trust. Prince was another musician that died without a will. And to me, that it just makes no sense whatsoever. So please, do not become a victim of dying without a will. Now, I'm in Florida, and if you happen to die without a will in Florida, then you're going to get the Florida will. And what would happen is now your estate is going to fall under the Florida intestacy laws, and the laws are going to dictate what's going to happen to your estate. Now, you may say, well, that's not fair. Well, in many ways it is fair, because if you didn't care enough about your family, if you didn't care enough about your surviving spouse, if you didn't care enough about your children, in order to take proper action to make certain that upon your death, all of your assets were going to be disposed in the most efficient manner possible, then I can understand why the state of Florida has intestacy laws. And by the way, just every state in the union have their own intestacy laws, so it really depends on the state that you live in and what their intestacy laws look like. So again, I wanted to take a few minutes today and share with you two issues that are very, very critical. Protecting your assets. I know we've had a really, really strong running of the bulls for the last 9.5 years, but nothing good lasts forever. So you need to make certain that you protect your assets, because if you're in retirement, the probability that you're going to be able to afford going to a market crash is going to be slim to none. And then the second thing, again, tomorrow is promised to no one. So make certain that you protect your assets, and that you can protect your family, and that you can make your departure easier for the betterment of your family along the way. So those are things that I thought would be very important for us to discuss on this podcast. And remember, if you need to reach out to me, you can feel free to reach out at my area code 786-766-1042, or you can email me at Bert, BERT, .Salazar, SALAZAR, at Cambridge, F as in Frank, P as in Paul, LLC.com, and I will be more than happy to help you with any of the questions. And if you're interested in starting your wills and trust, please feel free to call me and or to email me, and I will be more than likely and more than happy to go ahead and send you a link so you can get your plan done at a tremendous discount through one of my marketing companies and affiliate programs, which is LegalZoom. So again, remember that my goal for each and every one of you and for these podcasts that we have been doing for the past year or so is to kind of help you change the way that you see things. Because when you change the way that you see things, the things that you see change. Again, thank you so much for your time today, and I look forward to speaking to you next week.